You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionFit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is time to commence our broadcast week here on the Options Insider Radio Network. Yes, it is time once again for episode 1 for the week of the old OB, a.k.a. the Option Block, a.k.a. your bi-weekly source for all things options related. My name is Mark Longo. I'll be your host, your guide, your drum major leading this crazy parade down the streets here throughout the week here. A lot of great shows coming at you on the network. And, of course, wherever you're getting all of our content, make sure you keep rating and reviewing. Really does help new folks discover the content these days. Keep sending those questions in, too. We do love to hear from all of you guys and gals out there. And speaking of hearing the things, we like to kick things off a little bit differently here for our first show of the week. We like to play this game that's kind of become a fun part of the show now. You guys seem to love it. We're going to guess that 80s theme song. We recently expanded it to include movies as well as 80s TV shows. I won't let you know which category this one falls in. This is kind of an oldie but a goodie. It's kind of a new spin on a very familiar 80s theme song. Relevant because I do think something along these lines from this license is coming back to theaters soon. That's the only hint I will give you. But again, it's a different, little bit more, perhaps more updated version of the theme you may be familiar with. So without further ado, can you name that 80s theme song / show?
Got to get tough, yo, Joe. Got to get tough, yo, Joe. You know you got to stand tall when it comes down to the wire. You got to play rough when you cross that line of fire. You got to have guts to stand for your rights. You got to keep a grip enough to hold on tight. You got to do the fighting with all of your might. You got to keep the target straight ahead on your sides. Got to get tough, yo, Joe. Got to get tough, yo, Joe.
I'll kill it there because it keeps going and it makes it, if it wasn't already obvious, it makes it even more obvious what that show / movie / whatever it is makes it more obvious what it is. Unfortunately, Uncle Mike delayed by forces beyond his control. That means he forfeits his guess this week. So I'm going to guess for him. He's going to guess strawberry shortcake. And I'm sorry, Uncle Mike, you are incorrect. Instead, let's go out now, down deep into the heart of Texas. We are joined by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com, by way of Carmen Line Capital. Mr. Meatball, A, welcome back to the program. And B, can you name that kind of more updated theme / show / tune, sir?
Yeah, I was going to say that was the reboot of the cartoon theme song, not the original cartoon theme song of G.I. Joe. So they had G.I. Joe, then they decided to reboot the show, and that was the second theme for G.I. Joe. One of my absolute favorite cartoons when I was a kid. I mean, it was in it was He-Man and the Masters of the Universe, then it was G.I. Joe, and then Transformers, in that order in terms of my progression as a child along playing with toys.
I would definitely say that was the childhood trifecta for me. And most children of the 80s, that was the childhood trifecta. I'd have to put He-Man first, probably, then probably Transformers, then G.I. Joe behind it. G.I. Joe was more of a fan of the show than I was a fan. I didn't really play with the toys that much, but I was definitely into the show. And you're right, that was a later season kind of upgrade to the show. So I think it goes on to explain what G.I. Joe is in the theme. Hence, I had to cut it off because then it was even more obvious. So Uncle Mike already kicking himself that he had to miss that one. But there we go. It's time to get tough. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
That said, I think I do have a mint in the box Cobra Commander lying around here somewhere in the studio. I'll have to bust open and put on the shelves one of these days. It's lying there somewhere. We got Mr. Unlimited chiming in the chat. Says, who didn't have a G.I. Joe? He liked Voltron and Thundercats. Yeah, Thundercats, another one. It's probably 4. So it's like the top 3, and then Thundercats right behind it there. Voltron also, there were so many. Again, 80s, great time for shows, for cartoons, certainly for toys. I defy you to find an era, a decade, that had better children's programming and or toys than the 80s. You can't really find one. All right, we could argue about that for ages. Let's argue about what's going on in the market out there today. I think this is why Uncle Mike isn't here. A little bit of green, or excuse me, a little bit of red on the screen. That's spooking him. It's coming into showtime. We're seeing most of the major indices exacerbating, extending their sell-off off here. S&P off about almost 0.75%, not quite, about 0.7%. Got the Dow off a little north of 0.5%. NASDAQ leading the charts to the downside, off about 1.2% now. Before you get all spooked out there like Uncle Mike. Remember, we were just talking not too long ago on the show, a few weeks ago, about can S&P break 4,000 to the north and actually sustain it through the close. Well, we're still north of 4150 here, listeners. So we're still well above the 4,000 level, even with a little bit of red on the screen. So let's make a lot more red just to have it break through 4,000 again. So lest you get all worried and run for the exit stampeding. We're not quite at that point yet. Coming into the start of the show, we saw all products getting a little bit of a lift, a little bit of a boost from this time on last Friday, at least, certainly when we saw the vol kind of getting anemic out there. Coming into the start of the show, VIX was at about an 18.5. That's up not quite 2 points, but pretty close to about 1.75 points from last show. Remember, on Friday's show, on vol views, the spikes was at a 15 handle. I mean, things were getting pretty anemic out there. VVIX at a 111, so getting back up north a little bit, north certainly of the 100 level, now back up north of 110, up about 4.5 points from our last show on Thursday. VXX back up about 0.4 point, right about 10.4. It had broken the 10 handle there for a little while, and now coming right back up again. And then, of course, we have the big reverse split coming, starts effectively this Friday, but the last, trading day before, it's going to be Thursday night. So if you're worried about stub quotes and things, want to get out of it, Thursday night's your last chance to do that, or Thursday afternoon. And then Vol Q come into showtime. Once again, kind of glued around that 21 level. Doesn't seem to really be moving that much, up about 0.5 point from this time last show. All right, Mr. Meatball, you are the victor of our extremely difficult 80s theme guessing game today. You even got kind of the era and season of it. So I'll give you bonus points for that. What was lighting up your tape today as well? And did you have any sweet G.I. Joe figures? Dare I say it? Did you have that? They had one of the most infamous play sets of all time. It was like an aircraft carrier, and it was almost the same size as an aircraft carrier. Did you have that in your play set as a child, sir?
No, I didn't. The only kids I knew that had the aircraft carrier are the ones that were children of divorce, and one of the parents felt really bad.
The guilty dad got him the helicarrier. Yeah,
exactly. But you know what I did have was, after the '85 Bears one, you could save up your UPC.
Oh, do you have the William Perry G.I. Joe? Do you have that?
I had the William Perry G.I.
I would totally buy one of those. That is awesome.
My UPC. I don't have it anymore. I wish I did. And then I had the other one I really loved was Sergeant Slaughter. He was just awesome on that show. And so, what I did have was the Cobra Night Raven, and I had like a lot of the big vehicles. I didn't have any of the bases though, unfortunately. Those things were pretty cool, but I would my parents would buy like a television. I would turn the remnants of the styrofoam into a base for the G.I. Joes, and it was great back then when you had to have an imagination to play. It was one of my favorite things. So yeah, we've got but looking at markets, Cobra is winning today, you might say, because they've been snake bit so far. The S&P is soft. The NASDAQ really taking the chin. Although I would note Apple is up today. So you've got some strength in Apple, but everything else kind of in the dumpster. The Dow is strong because oil is looking pretty good today. And you mentioned, VIX is up nicely. A little bit of weekend effect, but also a really strong move in VIX and VIX futures. April expires on Wednesday. And, you mentioned the VVIX is back over 110, but I would point out that, the VIX is up almost as much as the VVIX. So there's not a lot of demand for, hedging and upside in the vol products today. Volume really anemic. We're not seeing kind of the race for the exits or the race to hedge out of paper today so far. And I'm not sure that's going to be coming in. We may need, another 20 or 30 points in the S&P to really start seeing any kind of hedging. But right now, just nothing there. I've not seen any true upside call demand in the volatility products thus far. And then finally, it is, I know we're not a crypto show, but it's an interesting weekend for crypto, and SPACs, which were all the rage in Q1, are just taking it on the chin. They are getting absolutely punched kind of across the board as, some of the excited money leaves all the safety of SPACs for the funness of Dogecoin and the like. So just a really interesting day. And the Coinbase, it's up above where its initial listing, but well below where it made that first trade now. And the kind of Maras and Riot blockchains of the world are really facing some pains. So, we've had the market kind of fakely strong on some of the mega caps and large caps, but mid cap and the Russell 2000 have been soft for several weeks. So we may be seeing just a little bit of selling, and I would not be surprised to see some rotating into some of the reopening trade and some of the small caps over the next few days, and maybe the S&P take a breather, and certainly the NASDAQ.
NASDAQ could certainly take a breather here, at least to the downside today, because it is leading the charge out there. Interesting what you're saying about VIX volume. We'll break all that down in a little bit when we crunch the numbers. But first, let me welcome on, better late than never, the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, can I just say, you missed a good one today. You missed a bit of a doozy. When you go back and listen to the show, you're going to be kicking yourself, sir.
I loved G.I. Joe as a kid, and I am sad to say that I missed that one today, but occasionally, sometimes a phone call runs long, or you got to make a trade, and sometimes you got to miss it, but there's very few things that I would ever put above the option block, but clients are one of them. So, I loved G.I. Joe as a kid. I remember screaming at the playgrounds in third grade, "Yo, Joe!" or "Cobra!" I mean, did you guys do that as well?
I still do that today when I walk down the street. I random people going by me. They look at me a little bit weird, but it's still fun today, sir.
Very good.
I actually shout Cobra every time I go short.
Okay, got it. Very good. Very good. So anyway, I wish I would have been there today, but nonetheless, I'll have to listen to it on the recording. But we are taking a little bit of a breather today. But let's be honest with ourselves. We have had just a massive uptick lately from the S&P 500. And if 0.5% down is a breather, then breathe away, market, because we were actually at the same levels on Thursday at some points. And so if we go 3 steps forward, 1 step back, I'm more than happy to handle such a thing. So I think this is just a pullback or just a profit take, whatever the case may be. So I can't say that this is something that's really concerning me by any means. And I'm looking as today as potentially an opportunity, but I'm going to make up my mind on whether I want to add more deltas later in the day or not. But that's kind of how I'm viewing this right now. Some other things that are happening, bonds are relatively flat on the day today. So with the 10-year note, not a lot of movement on it. IEF is down 8 pennies on the day. My covered calls that I have on that are still in the money at this point. So I'm cool with it going down a bunch more, quite honestly. But if I get called away this week and we end up selling some more next week, I will not be shedding a tear by any means. So we have that. Silver is roughly flat on the day as well. And it just seems like right now, when you have a market that's just so darn hot like what we had, you're going to get a day coming back at some stage. And primarily in terms of the sectors as to what's bringing it down, XLK is the one that is down almost 1% on the day. So it is definitely technology that's bringing this market down today. I don't know if I would call this necessarily a correlation with the 10-year note because we're relatively flat on the day with the bonds, but I'll be interested to see that if we how this plays out, in that we have been correlating fairly close with tech stocks and the 10-year note recently. So I think it's going to be interesting to see today, when it's not doing that, obviously, if maybe that correlation has been broken. And then the other thing, like Mark said, I never really talk about it, but Bitcoin is getting smoked right now, and you'll be curious to see if where it actually goes with it. But Bitcoin is you got to have a stomach for it if you're going to trade it, and I just want to reiterate, I think this, as a long-term holding, I think this is possibly a long-term trading straddle holding, but I really don't think this is wise to have Bitcoin or anything Bitcoin related as a long-term holding in your portfolio. So that is what I'm seeing on the day. Yo, Joe.
Yo, Joe, indeed. No, it's Yo Joe right now still is Dogecoin. It's one of the few things that's up today. All crypto have really very little, outside of the utility, have very little fundamental value behind them, but Doge has literally none, and yet rallying out there again today. We'll get to all that fun stuff on crypto coming up in a little bit, about an hour and 40 minutes from now here on the network. Got a great guest. Help me break down all the cool stuff going on. We want to talk more about options and analytics and how they all work out there from a crypto perspective. Going to get into that a little bit later today on the network. So stay tuned for that. But right now, looking at the major indices out there, seeing a decent amount of paper in VIX land. Again, not blowing the doors off. Remember, that ADV is also continuing to erode. Coming into today's show, the ADV in VIX now shy of the 500,000 level, 485,000. Not that long ago, a month and change ago, it was north of 700,000. So the ADV in VIX has come in markedly over the past month and change out there, and continues to erode, even though today looks like decent paper on the tape as of a few minutes ago, about 318,000 contracts on the tape. So maybe a chance they're going to break through that ADV today. We'll see, because there is some movement out there. But right now, at least 318,000 contracts on the tape in VIX land. SPY also looking decently robust, about 3.3 million. That's about exactly a million away from its ADV of 4.3 million out there. So SPY putting up some paper. The S also doing decent paper, about 800,000 contracts on the tape right now. The ADV is kind of locked around 1.2 million out there these days, and it looks like it's pretty much on course to hit that, if not exceed it again today. The Qs, again, Qs have kind of been moving 1+% a day for over a year now, it seems like. So another day with that movement to the dark side doesn't seem to be driving that much paper. 667,000 contracts on the tape right now, but the ADV out there is about 1.2 million. So it's got a bit of ways to go out there in Q's land. And the IWM, as Mark mentioned, they're kind of looking, small caps looking a little bit weak compared to the rest of the market right now. And 302,000 contracts on the tape in IWM. The ADV almost 2x that, 583,000 contracts out there. Let's go on out to single names. Also looking kind of light out there today as well. Only cost you 166,000 contracts to break into the top 10 most actives today. Usually it's at least 60-odd thousand more than that for an active day, if not close to 100,000. So kind of a light day out there. That gets you all the way to Facebook. Actually tied with our number 9, also 166,000 contracts. That's AMC. So things looking a little bit memey out there again today. Let's see what our old friend AMC is up to. Can it break the 10 handle? We shall find. Nope. 965. So no 10 handle love, but it is up about 3.5% today. Next up on our top 10 here, most active, number 8, back to Amazon, 188,000 contracts. Number 7, AMD. Now we're jumping up a little bit, up to 280,000. So the bottom portion of the top 10 kind of weak, but now we're getting a little bit more paper here. Number 6, Sundial. I haven't seen them back in the top 10 in a while. I know they've had a rough period of late. Some analysts out there saying of all the cannabis sector, Sundial might be the most diluted out there, and that's certainly that type of analysis. Not exactly looking good for this name. They're trading 90 cents now, so they've broken $1 of late. Of course, not that long ago, they were trading, February 10th, they were trading nearly $3. So kind of a rough couple of months here for Sundial, up about 5 cents or 6.5% today. And that's good enough for number 6, 320,000 contracts. Number 5, it's Palantir, still holding out up there, 324,000 contracts. Number 4, newcomer to the odd block. Haven't seen this name in a while. This is Clover Health, ticker symbol CLOV, CLOV, 365,000 contracts on the tape today. Let's see what's going on out there in Clover land in terms of underlying. It's a good day for them. Breaking the 10 handle, up about 14% or about $1.25 right now. So a nice little pop for them. They were trading $7 and change not that long ago, back in the late March. So nice little run here for Clover Health out there. It looks like this might be one of your latest squeezy type names out here. So there you go. We got Clover adding to the squeezy McSqueezerstein love out there, as Mr. Meatball likes to call him. Number 3, we got Neo doing a comparatively paltry 374,000 contracts out there. Number 2, Tesla, 818,000 contracts, as the Meatball pointed out. Another autopilot. People think autopilot means what the name says. I was always amazed they got away with calling it autopilot, because it is an autopilot. And yet they got away with it. And now some more folks apparently thinking it can drive itself and not being in the driver's seat and running off the road. So that's 2, Tesla, 818,000. Number 1, Apple. This is the one we were mentioning earlier that we said actually bucking the trend out there. 134 and about a half, up about 33 cents out there. They were talking today about how Apple finding a little bit of love outside of the iPhone for a change in some of their Macs and other products, which is a nice little spreading of the love beyond their main product category out there. That's good for a little bit of upside today. Also good for 891,000, which is actually kind of light. Usually this time of day, we expect Apple to be north of 1 million, and yet not so much today, but it's good enough for the number 1 spot out there. Earnings wise, we got some big names popping off this week. I'll give you a quick rundown of what we got in store for us this week. Today we had Coca-Cola, a.k.a. Mr. Buffett's favorite beverage out there, IBM and United Airlines. Tomorrow, Johnson & Johnson, P&G, a lot of ampersands tomorrow. J&J, P&G, Abbott Labs, and Netflix. Wednesday, Verizon, NASDAQ, Chipotle and Discover Financial Services. Thursday, AT&T, Southwest Airlines, Snap, Intel, Mattel, getting back to that toy land we were talking about earlier in the show, and American Airlines. And Friday, we got Honeywell and Kimberly-Clark and American Express. We got some earnings move reports here for us. Let's break down a couple for you really quick. Let's go to Netflix. Again, they were at about $5.40. At the time of this report, they were pricing in $34.18. In the past, they moved about $33.50. So like we mentioned last week, not a ton of extra juice on the docket out there in Netflix. But again, it's hard to blame them. This entire year, we've seen people who've overbid earnings volatility just get annihilated. So why line yourself up for the slaughter yet again? And it looks like they're paying attention to that out there in Netflix. One of the few names that seems to be pricing in a little bit extra juice, and it's probably warranted, is J&J. They are popping off tomorrow before the bell. They're at $159, almost $160 as of this report. They're pricing in $3.57. In the past, they moved almost $3, $2.96. So a little bit extra juice in J&J land, given the fact there's a lot of uncertainty out there with what's going to go on with their pause for their vaccine. Hard to argue that isn't warranted. P&G following a similar course as everybody else, pretty much right in line. They're at $135.60. They're pricing in $360. In the past, they've moved about $360. So keeping things pretty tight out there in P&G land. Let's go out to the airlines. American Airlines popping off on the 22nd. They were at $22.37 as of this report. They're pricing in $1.23. In the past, they moved $1.19. So it seems like the memo is getting out there, listeners. Extra juice is not merited. Let's see if the same can be said for Southwest Airlines, a.k.a. Love. They're popping off on the 22nd before the bell as well. They're at 63, pretty much even as of this report. They were pricing in $2.72. In the past, they moved $2.38. So a little bit extra juice on the docket for Love. That's interesting. They've been known to move a bit on occasion, so it seems like maybe the folks out there thinking it's warranted to price a little bit extra juice. Let's go out to the toy industry. We were just talking about them earlier in the show. Mattel, almost 20.5 as of this report. They're pricing in $1.41. In the past, they moved to $1.32. So a wee bit extra juice out there for Mattel. Snap, they're looking a little light here. They're at 62, pretty much even as of this report. They're pricing in $7.62. In the past, they moved $9.65. So a whole $2 less than previous movements. So they're really squeezing this blood from the stone on that one. We're wrapping up with Intel here, my old stomping grounds. They're on the 22nd after the bell as well. 64.20, pricing in $3.27. In the past, they moved $4.31. So a lot lighter in Intel land. Of course, some developments out there with the NVIDIA deal and everything else in their neck of the woods, but apparently not enough to merit extra juice in Intel. Interested in earnings, want earnings move, and as soon as these big names moves happen, the earnings move results report, stay tuned to theoptionsinsider.com. As soon as we have them in our hot little hands from our friends over there at ORADS, we'll put them up for you. Meanwhile, it's time for us to keep on rolling. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block. Time to get weird, time to get wild, perhaps even whimsical. Let's kick things off. Where did our Eye of Sauron fix its gaze first? Haven't gone out to these lands in a while. This is Colgate-Palmolive. Ticker symbol CL, trading almost $80 even right now, about 80.16 off about a little more than half a buck, or about 2/3%. You don't need me to tell you what Colgate-Palmolive does. Let's just look at the year that's been out here in Colgate. A year ago actually wasn't that far off of where it is right now. On April 20th of last year, they were trading $72 and change. So about $8 below. Actually, exactly. They were at 80.16. They were 72.16 a year ago. So given how much of annihilation we saw last year, that actually isn't that bad. And they kind of sold off a bit more, looks like. So they kind of continued selling off all the way into mid-May, down to about 68 and change. Then they began their turnaround. So maybe the great nadir for, let's just look a little bit farther and see. Is that the case? Yeah, it looks like they sold off. They sold off pretty hard into March, down 62 and change. And they bounced up to 73, where I told you, right, about April 20th, and then they sold off again. So they had a couple of mini rebounds over there, but then they started rebounding more aggressively in May, got up to on June 10th, not June 8th, June 10th at 74.36, then kind of gave it up again. It wasn't until August they got back up to those levels again, but they, unlike the rest of the market, they did actually make those levels again. And then had a few more fits and starts along the way until by November, they were trading about 86, so actually north of where they are right now. And they hung up out there for a while, had a high of 86, almost and a half over the course of the past year. And kind of bounced around that level until pretty much the end of the year. Right in January kicked off, they started selling off again. By January 22nd, down to 78 again. And they got down as low as, looks like about 74 and change over the course of mid-March or so. And then they kind of have since rebounded yet again back up to where they are right now, right around the $80 level. So it's kind of been an interesting trajectory for this kind of broad consumer products company over the course of the past year. Let's see what our Eye of Sauron has fixated upon out there today. Looks like it might be some put love to the tune of the April. These are the weeklies, obviously, because regular monthly April's off the board. So these are expiring on this week, on the 23rd. April, 78 puts going up for 26.8 cents through the offer. 5,019 times. Like I said, we're at about an 80 right now. So these are about $2 out of the money over the course of the next week. Also worth noting, there are earnings pretty close to on the horizon, but not in the lifespan of this option, which is interesting. Earnings are the following week on April 30th. So we have someone coming in, looks like gobbling up 5,000 and change of the April weekly puts, 78 puts expiring this Friday, paying, looks like about almost a 25 vol for those bad boys through the offer, and doing it before earnings. This time, noting, looks like they are going ex-div, so that could be playing with some of this paper. This isn't that much paper. Usually ex-div is tens of thousands, if not hundreds of thousands of contracts out there. But still, a bit of a weird one, Mr. Meatball here, to see a little bit of put love going up here so close to earnings, but doesn't actually hedge you through earnings, sir. What's your take on these Colgate-Palmolive puts, sir?
Yeah, it feels like a direct play on maybe things continuing to get a little soft market wide, or could be some sort of earnings warning. It is definitely a direct play on just the stock dropping. So I don't know the reason behind it. Could be a concentrated position worried about this week, or a warning, but it is 100% a direct play on this thing dropping.
Certainly seems like it. And let's see. So far it's down, but not exactly where it needs to be. It needs a couple more handles to go. But interesting. What do you think about this? Kind of a broad multinational consumer products conglomerate having to sell off a bit by the end of the week. It's a weird little play, yet we've seen weirder. We'll put this in our to be watched. Also, should be noted again, that is ex-div out there, so that could be playing a little bit of havoc with the numbers out there as well. So we'll keep an eye on this. Let's see if ex-div had anything to do with this as well. But this kind of paper is usually we see a lot more if it's going to be some sort of div-related play out there. Let's go on out now to our next name. I do believe this is a newcomer to the iBlock. At the very least, we have not discussed them in quite some time. This is Workday Inc. They are a software company for on-demand financial management and human capital management. So there you go. That should tell you all you need to know about what it is that they do. Ticker symbol WDAY, WDAY. Trading right now 254 and change, off about 2.25, or about not quite 1%, but pretty close to it. A year ago, this name was pretty beat up. It was down to about 150. Actually had its low intraday. Looks like a couple of sessions later, down to 137.62. So wee bit north of where it is right now. Then it had a nice little run. Looks like it topped out at 243 and change on August 28th. Then it sold off again down to pretty much 200 even in early September. Then seemed to bounce off that 200 level, get back up to about 230 again in mid-October. It seemed like it did that dance a few times until it finally late December, actually December 22nd, got up to about almost 260, 257 and change. And then it sold off right again, back down to almost looks like about 220 this time. So not quite the 200 strike, but it did a lot of bouncing around in that 200 level for a while. And then in late January into early February, it started rallying again, got up to its 52-week high of about 282 and 3/4 in mid-February. And then it sold off once again, right back down to about 230 again. So this has had a number of fits and starts over the course of the past year. And we find ourselves once again kind of in the middle of one of those. Had a couple of recent rallies and sell-offs, and a rally just recently up to 265. That was on April 13th, and now right back down again to where we find ourselves right now, 254 and 1/4. So net, it's been a good year for Workday, but it hasn't been all straight up. It's been mostly up with some fits and starts there along the way. Interesting spot we find ourselves, lofty, but not exactly at the heights here in Workday. Let's see what our Eye of Sauron found out here. I'm going to guess, given the recent activity out here, probably something to do with puts. Let's see if I am correct. Looks like, yeah, we got some puts. We got 4,288 of the May 230 puts. That's an interesting strike. Remember, I said we're trading at 254 and change, so it isn't that close to the fire. It's something that might be a little bit closer, but they are meaty nonetheless. These are May 230 puts, trading for $2.10. Remember, I said, listeners, coming into a few minutes ago, we're at 254. So these are $24 and change out of the money. Still trading for a pretty lofty $2.10, about a 35 vol. And let's see, there were 206 at 241. So it seems like someone may be harvesting a little bit of the old risk premium. Let's see, the stock was a little bit higher, 255.5 or so when these puts went up. And let's see, the next earnings is outside of the lifespan of these options because it comes on May 26th, and we've got expiration on the 21st in May. So interesting stuff. Once again, Mr. Meatball, looks like maybe someone drawing a bit of a line in the sand. 230, it's still lofty compared to where it was a year ago, but obviously a nice discount from the 280 and change level this name was trading at not too long ago. It seems like someone opting for one of your favorite strategies. I know the Rock Lobster's favorite strategy, the line in the sand put, this time, sir, in Workday.
Yeah, you're collecting almost 1% of the value of the strike, selling these, for a month, and they're 10% out of the money. It's a value put sale. Someone definitely going for yield, and who knows, and maybe they're willing to, like you said, a line in the sand buy if it dips below there. But this feels a little bit more like a yield capture play than a actually trying to get the stock. Just because, it's 10% out of the money. So I just think they want I just think they want the yield. That would be my bet.
Seems like it. We may come back to this. We have a lot of names to come back to this. I'm not sure if we're going to put this 4,300 lot in the to be watched category because our cup overflow with there. In fact, let's pay off one of those right now. Let's go back to March 22nd. When we talked about a name we've been talking about a lot lately, we joke a lot about Stone Cold, but another name that's up there a lot of late is Farfetch, the British Portuguese online luxury fashion retail platform. Say that 5 times fast, I dare you. We've been talking a lot about them, including a big print back in late March. Seemed like maybe somebody was a little bit spooked about the near-term future of Farfetch to the tune of 48,000 of the April 45 puts going up that day for 24 cents. So pretty much lifting the offer there. A total of nearly 60,000, about 58,000 traded on the day. The stock at the time, $60.25. I point that out because when I tell you what stock is now, you might see why this guy bought these puts. Because it seemed like they had a reason to be concerned. It seemed like, and maybe their fears were merited because this stock kind of just got annihilated right after this put trade went up. In fact, if you look at, let's go out to the graph here. If you look at the graph of Farfetch, the high is the near-term high recently. The big high was in mid-February. But right behind that, March 22nd, the day these puts went up, the stock hit 62. And it has not looked back pretty much ever since. So this person had what seemed like interesting timing. By the time we got to March 29th, the stock was trading 47.72. So like I mentioned, these were the 45 puts. So the stock drops that much in a week. Guess what? These puts were looking pretty good. This guy or gal had many chances to get out because this stock got annihilated. By March 26th, the puts that he paid 24 cents for were trading 71 cents. By March 29th, they were trading $1.50. So he had quite a bit of juice on his hands should he opt to take that hedge and do something with it. I think you can tell by my tone, listeners, where I'm going with this is that they, once again, this is like a theme. We have all of our long premium buys. I don't care if it's upside calls. I don't care if it's downside puts. People have these trades that work out and they don't do anything with it. And that is pretty much exactly what happened here, because the stock ended up closing north of the 45 handle on expiration. And these puts that were trading, 6x, 7x, 8x, not that long after the trade went up, ended up going out worthless, and they were still open. 53,000 of these puts were still open as of the close last Friday. So they all went the way of the dodo. Just on the print we looked at alone, you're talking 1.1 million gone. And of course, if you add in the potential profits they could have had on those puts, it's a lot more that they left on the table. So someone had some strong concerns about Farfetch. It seems like those concerns were merited because the stock got annihilated the minute these puts went up. And yet, for some strange, mystifying reason, they once again did not opt to take their money and run. And so they left many millions of dollars on the table as a result. Mr. Meatball, I don't know what's going on here. This is kind of like a theme for the Odd Block. Long premium / hedge money left on the table. This person was clearly right. They were clearly concerned. They're clearly a large equity holder. So they're losing on the stock. The options are there to save you. You need to do something with them. And yet, for whatever reason, Mr. Meatball, they did not. Can you make any sense of this madness for me, sir? Because I cannot.
No, I mean, at least start taking some off when you make that much money that quickly. I mean, it needs to be done. I understand why you'd hang on to some or a big chunk of them, but you need to do something when you hit a winner. I don't fully understand it.
Yeah, we say it all the time. When you buy premium, you need things to happen. You need them to happen quickly. They don't get much quicker than this one. The stock got annihilated, really, about a week or so after the trade went up. So you had plenty of time. Your trade was up many multiples of what you had on. The only thing I could see is they were concerned about more downside, but they were almost already at their strike. You bought almost 60,000. Take a 10,000 lot off. Put some of that money in your back pocket. So at least you got something against that stock. This was, again, listeners, that's why we like to point these out, because size money, not always the smart money, at least when it comes to position management. It was smart in this case in direction. It was well timed from that perspective, but terribly timed in terms of they did nothing with it. So if this has ever happened to you, or if you've been caught up in this, maybe with a 10 lot, not a 48,000 lot, there you go. Other folks have done it with much larger size on the line, listeners. And now it's time. Maybe Uncle Mike will tell us what to do with our puts. Let's find out. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, listeners, it's Monday. Time for a dose of strategy. Uncle Mike, I need some strategy right now. Let's just say, hypothetically, I don't know, I bought 48,000 puts in a name that I thought was going to drop. And then that name dropped precipitously right after I bought said puts. And my puts were trading, I don't know, let's say conservatively 6x. What should I do, sir?
Something. That's probably the best answer. I would say, typically if I'm in that situation, I'd probably roll down the puts, maybe sell some other puts to create a put spread if I'm happy to own the stock at that lower level. Or there's a lot of things you can do, but the answer I think would be something.
I think that's a good answer, sir. I don't mean to waylay your block of strategy. I'm just mystified by this, sir. So much money on the table.
Yeah, if it's 6x, I mean, I would probably start looking a lot sooner than 6x in that instance. But if you have a married put, let's just say, and you own a stock and you have a married put, then at some stage, unless, don't get me wrong, there are times where I think there is reason to do nothing, but I think you should do something with some of it. And I don't know, hopefully it worked out well with the equities for it. I don't know. We'll see. But maybe there's other parts to the puzzle that we didn't see. And that's what I'm hoping anyway. But anyway, what I wanted to talk to you today about, our audience today about, was the diversification of strategies when markets are at all-time highs. So let's say that you were on the sidelines with some money and you like the market right now, but it's at all-time highs. So you're kind of concerned with getting into the market. Well, there's a couple of ways with which you can do it. The first way would be, of course, selling a out of the money put. So let's say XYZ stock's at 60 and you'd be happy to get XYZ stock at 55. Of course, you can sell the 55 put. If the stock goes up or stays the same, you get to keep the premium. And if the stock goes down, you're happy owning the stock at 55 anyway. So that's one way with which you can do it. But I want to talk about some other ways with which you can get into the marketplace that go a little bit beyond just selling a cash secured put. First way would be to do a ratio put spread. So let's say that same stock that you like, it's at 60 right now, and you think the stock's going to go down to 55, but you're happy to buy it at 55, but you want to make some money on the way down and get paid to get into it. Well, then one thing that I would suggest would be a ratio put spread. So what you could do is you could buy the 60 put for, let's say, $2, and then simultaneously sell not one, but two 55 puts for $1 each. By doing that, it's a net break-even trade. So there's no debit, no credit for it. And what that will do is that makes it so that you will make money from 60 down to 55. And then if the stock does go below 55, you'll buy it at 55. And this is assuming if you were to hold everything till expiration. Now, that's kind of a little bit more of an advanced trade. And the advantage of it is that if the stock does go down to the level you think it's going to go down, then you will make $5 between 60 and 55. Whereas had you just sold that 55 put for $1, you'd only make the $1. So in that case, you're making $5 instead of $1. Great deal. But then what's the downside to that? Or what's the disadvantage of that? Well, of course, the disadvantage is that if the stock stays the same, then you'll have an even money trade. You'll break even on it because all those options will expire worthless and you won't make any money on it. Stock goes higher, you won't make any money on it. Whereas if you just sold the put, you'd have that $1 in place if it were to stay the same, go down a little bit, or go higher. So there's advantages and disadvantages to it. If you like that idea, then perhaps you could take 100 shares and just sell a put on the $5,500, let's say, and then maybe do that ratio put spread on the other 5,500, and then you can have a little bit of diversification with it. I often try and do things like that because of the fact that you have the ability to diversify and do different things. See, diversification is very important. Every financial advisor on the planet talks about it in terms of you need to have some stocks, some bonds, some large cap, some small cap, some mid cap. I personally don't really do that much. I like to make my diversification with options. And I think, and don't get me wrong, in terms of diversification, I do a lot with having different stocks and things like that. And it's important. Don't get me wrong. So I shouldn't say I don't do a lot of stuff like that. I actually do quite a bit of diversification, but it's kind of built in that, well, with SPY, you own 500 different, you have control of 500 different stocks. So that's quite a bit of diversification. But where I'm going with this is that I think what's more important is that you have the risk managed. And part of managing the risk is diversifying option strategies. In the example that I just gave, you have the ability to benefit if the stock were to do what you think it's going to do. Now, let's say that you're concerned with, shoot, Mike, I'm going to miss this thing. Stock's at 60. I think it's going to go down to 55. But if this thing goes up to 80, I'm going to be kicking myself. Well, that's where the third strategy can come into play. Let's say you have another $5,500 that you're thinking of using. What you could do is you could sell the 55 put and you could buy the 65 call option for the same price, another net break-even trade, or another, there's no credit involved, there's no debit involved. It would be zero cost. Now, of course, there's risk involved in all three of these examples. You have risk from 55 on down to zero. But if you want to have and play that smaller little area, you can do that. So let's go through the example again. If the stock were to go down to 55 on strategy 1, just selling the put, you'll get paid $1 to get into the stock. Strategy 2, where we're doing this ratio put spread, you'll get paid $5 to get into the stock. Strategy 3, the risk reversal, you will actually get paid nothing to get into the stock because of the fact that you use that dollar credit you got from the short put to buy the 65 call and create a risk reversal. So with that, if the stock does go down to the level you think it's going to go down, in the example with which I just stated, you're going to be ahead $6 when the stock goes down to the level that you thought it's going to go to. If the stock stays the same, then, well, you'll be ahead $1 because the ratio put spread will be expire worthless and the risk reversal will expire worthless, but you'll still get $1 from one of the short puts you trade. And let's say the stock goes higher and it goes up to 70. Well, you'll get to collect all the upside from 65 on up because you have that long call you bought. And the short put will expire worthless, but then that ratio spread will also expire worthless, which won't net you any money. So where I'm going with this is that if you have these thoughts to where I don't want to do this, I want to do this, I think this, that, or the other, you have the ability to create a strategy and use multiple strategies on the same stock to create things like this to give you what you need with the option product. And that's where I think not only diversification of assets is important, I still think that risk management is 1,000,000 times more important than diversification, my opinion. But diversification of strategies within the option world is very important because it can protect you against yourself, meaning that you can have different thoughts and you can create strategies to protect you from your own mistakes. And I think that's extremely important because I could go on for probably another 4 or 5 strategies. Let's say you're concerned with it going down. Well, then you can do a collar. Let's say that you're concerned with this, that, or the other. I could go on for a long time. But what I think is important is that you have that mentality. How are you going to handle things going against you? And diversification of strategies within the option realm is something that's very important to do. That is the strategy block for today. Once again, Yo Joe!
Yo Joe, indeed. As we head into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, I already mentioned here on Around the Block what's coming up from an overall earnings perspective, a lot on the horizon. I will say I was kind of surprised. We have our results here from our mini options poll. I was kind of surprised at your overall kind of shrugging of the shoulders to mini options. I thought, given some of the conversations we've had of late with people out there, that there would be just an enormous amount of interest in all things minis. Didn't seem like it was really resonated with you because we asked you, should minis come back? Quite simply, some flavor of what they did before, which are, of course, the 1/10 size options on Amazon and Apple and all that kind of stuff. So you can have a mini contract for a lot of these smaller players out there, new players. And yes, it's comeback time. Only got 59.5% of the vote. So it won. But no, they should stay dead. Got about 40.5% of the vote, which surprised me. I thought it would be much more of a landslide. Hey, bring back the minis. They're perfectly sized for my account. Yet right now, at least, not so much out there, which is kind of interesting. Looks like we also got J3 Dingle, one of our regular listeners, chiming in saying, Farfetch was concerned about a visit from the SEC with the insider trading and Archegos. There certainly was well-timed paper, I will say that, which makes it that much stranger if you're going to risk the ire and the wrath of the SEC to put on some paper that seems to be a little bit well-timed, shall we say. You should at least take it off. Maybe that's why they didn't take it off. Maybe the SEC froze them. Maybe we should look into that. Maybe they said, hey, wait a minute. This is no bueno. You cannot get out of this, which would actually make some sense. All right, let's go around the hornland. Let's start with the greasiest of Meatball. Mr. Meatball, sir, what are you keeping an eye on for the rest of this week until we can gather here together on Thursday?
Yeah, I want to know what's going to happen with markets. Are we going to see some extended selling, or is this just a one-off day of ugliness? I think that we're getting closer and closer to tech earnings, and we do have a pretty busy earnings week. So that's going to keep me extremely occupied over the next couple of days and weeks.
There you go, Mr. Uncle Mike. Same question for you, sir. What are you looking at over there for the rest of this week until Thursday?
Well, I want to see if we can go back to the all-time highs. We're really close to them, and that I'm probably not at this point. I'm going by the old saying: buy the dump, sell the hump, don't diddle in the middle. And I'm probably going to wait for a little bit more of a pullback. I'm thinking before I put more power on the table.
What is that? What is that saying? Take me through that one more time. Buy the hump.
Buy the dump.
Sell the hump. Sell the hump. Don't diddle in the middle.
And
I'm keeping that.
Oh, it's a class. An old futures day trader taught me that one probably 20 years ago. And I think he's actually working construction now, but that's another story. But anyway, I think that right now I'd have to really see something at the end of the day to get more bullish, which I still might, but I would like to see a little bit more of a pullback or have us make more new all-time highs before I put more money put more deltas on the table. So that's what I'm looking at right now.
You already got all the deltas on the table. How could you possibly have more, sir? I guess we'll find out. Unfortunately, we won't find out right now, listeners. That music means we've come to the end of this epic sojourn through the world of all things options. But hey, as we talked about on the top of the show, if you think crypto may be a little bit active, maybe a little bit interesting, maybe a little bit volatile, maybe something worth talking about today, we'll come back in about exactly an hour because we're going to be doing just that. In the meantime, we'll pump some fun stuff into the live chat. So if you're hanging out there, you'll get some fun previous broadcasts for you. Back again in exactly an hour to break down all the madness going on in the world of crypto. There's a little bit of it, so stay tuned for that. But before we go, let's go back around the horn. Let's start with the uncle-list of Mikes. Mr. Uncle Mike TOSAW, sir. If folks want to hit you up, learn more about Uncle Mike and St. Charles Wealth, where should they go? What should they do?
Go to my website, stcharleswealth.com, or you can follow me on Twitter at Mike TOSAW. I will be sharing an extended version of the strategy block for today on diversification of option strategies and all-time high markets.
There you go. Check them out at Mike TOSAW, TOSAW, on the old Twitter machine. And the greasiest of meatballs, sir. If I want to sign up for, let's say, some options-related emails, where should I go? What should I do?
Yeah, we put out great content every day. Reach out to us. Go to optionpit.com and drop in your email, and you're going to get sent some pretty amazing content on a daily basis.
There you go. OptionPit.com is the place to go to begin your journey. On behalf of the greasiest of meatballs, the unclest of Mikes, and indeed myself, thank all of you out there for downloading, streaming, subscribing, for listening live. Stay tuned back in exactly an hour to break down the insane world of crypto. And then back again tomorrow, interview Tuesday, all the way through to Education Wednesday, your double dose of boot camp and OPR. And then all the way through to Thursday, another episode of the Option Box.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.